When you hold a stock like Apple and you consider its services revenue, how do you think about the news story of this morning in terms of the attractiveness of that name?
Sure. Well, thank you so much for having me. Apple has been a long-time holding of Jennison Associates, and we look at the business as one that is extraordinarily sticky. Companies who use Apple products and consumers who use Apple products tend to have a difficult time switching over to other platforms. And as a result, the sustainability of the services business is incredibly attractive. Certainly, if you look on the hardware side of the part of the business, there is more competition. There also is saturation and maturity in that business. So really what drives our investment decision is the sustainability of that services business.
Erika, the other big story of the morning, which we have to discuss, is Fed speak. In fact, it will probably be the speak of the week. And Fed Governor Waller is kind of front and center, basically saying the Fed may need to cut rates this year, emphasis on this year, depending on inflation, but there is no need to go as deep or as fast as historically a Fed might have done. How does that inform your view of the technology sector?
Sure. Well, Jennison is a bottoms-up research house, and so we tend to look at companies over a longer period of time, looking at the duration and sustainability of the company's competitive advantages. But one of the critical factors that goes into our decision-making at Jennison is really looking at the ability of technology companies to be deflationary over time. And we think that is going to be more important than ever over the next 3 to 5 years, as companies are able to use AI to bring down their costs, to increase their productivity to an extent that we do not think is properly discounted in many of the share prices today.
Two of your biggest holdings are Nvidia and I believe also Broadcom. You know, we go back to that Magnificent Seven discussion of last year. Are those solely AI stories to your mind?
Great question. We at Jennison Associates have owned Nvidia since 2016 and Broadcom about the same time period. And the reason for the duration of those holdings is that we look to those companies as key enablers within artificial intelligence deployment. Certainly, Nvidia is more of a pure play in that arena. Broadcom is a little bit different in the sense that it not only has AI ASIC parts, custom parts that it makes for hyperscalers such as Google, but it also has a very strong portfolio of networking products that we think are going to be essential within the AI ecosystem. And beyond that, they have very strong market share in many other semiconductor businesses that may be more mature, but the company has extraordinary pricing power that has sustained over the last decade, and we think will extend for the next decade as well.
Another name that you hold is AMD. The stock currently up almost 8%, putting it on track for its biggest jump since early December. A lot of analysts have been updating their price targets on this name. I sat down with Lisa Su when they kind of fully launched the MI300X and started to really build up their AI story and boost their forecasts. It's the same question. Do you see AMD as an AI play or something broader?
Well, as you point out, AMD is one of the top holdings at Jennison Associates. And the reason for that is not only do we think that the company has a very viable and important product portfolio to address the AI opportunities, but we also look to the PC segment, which may not be getting so much attention as AI does today because it's not as exciting. It's a more mature industry. But I think that there is going to be an important multi-year upgrade cycle to AI PCs. And there, AMD is very well positioned to continue to gain market share and increase its average selling prices. So we think the combination of those two markets, along with its very strong portfolio of programmable logic devices, which goes into different end markets, is going to push advanced micro devices earnings higher than expectations for the next several years.
Erika, I think one thing that many of those chip names have in common, other than the sort of battleground for high-performance GPU, is exposure to China. And there is the policy side of this, where the US has clear export controls and restrictions of technology to China. And then there's the politics side of it. And I believe that one of China's vice premiers this morning was trying to say, like, look, we need open access to technology. As an investor, where do you position yourself within that?
This is a great question. I would say that the biggest concern that we have at Jennison at this point is the strain on relations with China vis-a-vis the ability for there to be technology innovation. Undoubtedly, the world is much more globally interconnected with regards to technology deployment, innovation, and supply chain. With there being so much more, frankly, tension between the US and China, this is an area that gives us a lot of concern. We still believe that the pace of innovation will continue, but we are monitoring the situation very tightly. As one example, the biggest foundry in the world, the biggest maker of semiconductors in the world for other companies is Taiwan Semiconductor. If TSMC's supply chain is disrupted, that would harm the entire technology industry and, frankly, the global economy. So this is a very important issue that we are monitoring at Jennison.